Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. Today, on the data front, the Fed's preferred inflation gauge, that is the Personal Consumption Expenditure Price Index, rose 2.5% in June from a year ago, easing the path to a rate cut, also as expected by analysts. International rail operator Eurostar is cancelling a quarter of its services today and over the weekend after the French rail network faced coordinated acts of vandalism just ahead of the opening of the Olympic Games in Paris. Domestic rail services were also widely disrupted. In a statement, French railway operator SNCF said its network had experienced several concurrent malicious attacks early this morning, with fire damaging its facilities and its fiber optic lines. Industrial conglomerate 3M posted a solid quarter, beating both top and bottom lines. 3M shares jumped more than 17%, boosting the Dow after the company raised the lower end of its annual adjusted profit forecast. Colgate-Palmolive also beat on top and bottom lines with organic sales growth of 9%. The consumer products giant also reiterated its full-year net sales outlook of 2% to 5% growth. The Bank of Ghana today left the benchmark interest rates unchanged due to concerns over the outlook for inflation given pressures on its currency. The Monetary Policy Committee held the rate at 29% for a third straight meeting. Some tech news: Apple's iPhone continues to lose ground to other domestic models in China. Although China's smartphone shipments grew 8.9% year over year to 71.6 million units, Apple saw a 3.1% decline according to latest data. And in Nigeria, President Tinubu is appealing to protesters against bad governance and economic hardship, planning to go to the streets, not to resort to violence and turn Nigeria into a domestic crisis zone. U.S. inflation, as measured by the change in the Personal Consumption Expenditures Price Index, ticked lower to 2.5% on a year-on-year basis in June from 2.6% in May. This was also as expected. On a monthly basis, the PCE price index was up 0.1% after we saw unchanged metric, that is 0% growth in May. The core price index, that's the core PCE price index, which excludes volatile food and energy prices, came in slightly above expectations, rising 2.6% in the same period. The data showed goods prices fell 0.2% on the month, while services prices increased, albeit slightly. Housing-related prices in June also rose 0.3%, which is a slight deceleration from the 0.4% increase in each of the last 3 months, and also the smallest monthly gain going back at least to January 2023. Personal income increased 0.2% during the month to $23.9 trillion, short of the 0.3% consensus estimate and 0.4% growth in May. But it is still the second highest monthly earnings ever recorded. We also saw personal spending up 0.3%. Readings leave the Fed Reserve September cut in play as we wait for the July and August data. Yesterday, we saw the U.S. economy up 2.8% in the second quarter, higher than 2% expected and 1.4% in Q1, further dispelling notions of a possible hard landing or recession. The build-up of inventories added 0.8 percentage points to GDP growth in the quarter, following a decline in the first 3 months of 2024. So that implies the higher GDP may not be as reflective of consumer demand as it looks. International rail operator Eurostar had to shut down a quarter of its services today and over the weekend after it faced coordinated malicious attacks and vandalism just ahead of the opening of the Olympic Games in Paris. Passengers are being diverted onto local slower lines to and from the French capital, extending joining times by around an hour to an hour and a half, alongside the cancellations, affecting many of the 2 to 3 million visitors expected to visit Paris during the Games. Paris plans to proceed with its 2024 Olympic Games opening ceremony today after the massive attack. An estimated 2.6 billion euros will be spent by tourists traveling to Paris, but total cost of the Paris Games has been widely reported to be around 10 billion euros. Paris hopes hosting will stimulate development of infrastructure, draw tourism dollars, and boost employment. A recent independent study also revealed Olympic Games 2024 are economically beneficial and set to generate between 6.7 and 11.1 billion euros in net economic benefits in the Paris region, with an intermediate scenario projecting 8.9 billion euros in net economic impact. According to the study, most of the 7 billion euros in private funding for the 2024 Games comes from media rights, sponsorship, and ticketing, but also private investment in long-term infrastructure projects, and it includes an IOC contribution of $1.7 billion in cash and services. Public funding amounts to about 3 billion euros and mainly covers projects that will address long-term needs of local communities. The broadcast rights are generally the most lucrative piece of the pie, and broadcasters who pay for the rights hope to sell more in advertising. Companies also pay huge sums for the rights to use the Olympic rings in their advertisements. However, the Olympics have almost never been profitable. Still, it's a good show to show that you are a serious player on the world stage, and for Paris, it can be a massive boost for tourism. Compared to where it was in 2020, Apple has a larger overall market share in China than what we had in 2020. That was 8.3%. That was Q3 2020. Compare that with 13.6% today. But it is losing ground to domestic competition. Apple's market share fell despite aggressive discounting of iPhone models during the quarter, and we now see all local companies as the top 5 sellers in China, ahead of Apple iPhones. Xiaomi's smartphone sales benefited from marketing buzz around the launch of its first electric car, the SU7. Vivo, Oppo, and Honor are the other Chinese brands in the top 5. Huawei also launched its flagship Mate 60 smartphone series in September last year. Apple hopes new AI features will help its differentiation in Asia's more competitive terrain. Apple unveiled Apple Intelligence in June, also partnering with OpenAI to give Apple users free access to ChatGPT, larger AI models capabilities. If China-US trade tensions get worse in 2025, one can expect more barriers to be erected to stall penetration of US players like Apple. Apple looks unperturbed, having recently regained its number 1 position as the US's most valuable company, ahead of Microsoft and Nvidia. The US economy grew 2.8% in the second quarter, higher than 2% expected and 1.4% in the first quarter, further dispelling notions of a positive. Next, on oil prices, we see several factors impacting the demand-supply dynamic. First is the demand from China, which is so far sluggish. Delayed rate cuts also means a firmer dollar, which hurts demand for oil. Better than expected economic growth, however, applies higher demand from the world's largest energy consumer, that's the US, which helps to keep prices slightly higher. Yesterday, Goldman Sachs analysts said that whoever wins the US presidential election in November will have limited tools to significantly boost oil supply next year, adding that strategic petroleum reserve stocks are low and regulatory easing. Yesterday, Goldman Sachs analysts said that whoever wins the US presidential election in November will have limited tools to significantly boost oil supply next year, adding that strategic petroleum reserve stocks are low and regulatory easing of supply may only significantly boost US supply in the long term. Goldman Sachs expects demand to be even weaker next year, hitting prices more noticeably, especially if tariffs go up, which will weigh on economic activity worldwide. Prices could be even lower if the Federal Reserve delays interest rate cuts into 2025 due to a higher core inflation rate. According to Restart Energy, crude prices in the next few days will largely hinge on economic news from China, the likelihood of US rate cuts, and how negotiations progress in the Middle East. A reversal of much of the work done under the Biden administration for climate change, stalling progress of the Inflation Reduction Act, which incentivizes investment in renewable energy and clean tech, all will have implications. We could also see an end to restrictions on oil and gas leases, facilitating expansion of the fossil fuels industry, depending on who resides at the White House come next year. President Bola Tinubu has warned organizers of the August 1 nationwide protests against proceeding, as we do not want to turn Nigeria into Sudan, he says. President Tinubu said protests fueled by anger and hate easily degenerate into violence and set the country backwards. He added that the reworking of the social welfare scheme is in progress. That's in Nigeria, and he intends to make the impact more felt and closer to the people. There's always a place for peaceful protest and drawing more attention to lapses in governance and the social plight of the population. My take has always been that this government inherited a very difficult context with strong embedded interests, forcing compromises and slowing down the pace of change. Even where there are strong declarations of intent, weak institutions that need overhaul, and in some cases completely reinvented, means implementation will be slow, if not completely stunted. The government may also have underestimated the challenge before them. The people may be more impatient, and rightly so. And communication to carry people along, exposing proposals to more discussion and getting more inputs are all areas for improvement. My sense is that the tone is right and the direction of reform has already been applauded as broadly well articulated. Implementation and courage to sustain an initially strong momentum are all areas that are being watched. 3 areas calling for immediate acceleration of reform. First, people welfare issues. Second, infrastructure. Third is plugging fiscal leakages from bloated structures, corruption, and low productivity. And of course, we can't forget the issues around security. None of these will be addressed by violence or massive disruption that only looks like set to birth a different chaos. Looking at markets, first on crude oil, Brent crude as we speak inched down. It's down 2.26%, $80.51 for Brent crude, driven by demand concerns. European markets were mostly higher as a global stock sell-off eased and investors digested the latest US inflation data. Wall Street rebounded with mega cap tech and chip stocks recovering from a tough week. Also, the largely in-line key inflation reading kept bets for an early start to interest rate cuts alive. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please do send your comments again. Thank you so very much for watching. Enjoy your weekend. Bye-bye.